Hello, traders. Welcome back to the Forex Muse. Today, we're tackling a huge challenge that so many traders face, letting emotions control their trading decisions. Specifically, we're diving into how constantly watching your profit and loss can spark anxiety and throw you off your strategy. If you've ever taken profits too early or held on to a losing trade longer than you should, this video is for you. We'll break down why this happens, how it impacts your results, and how you can fix it to become a more consistent, confident trader. So let's jump right in. Picture this. You're in a trade and you can't stop checking your P&L. One minute it's up, the next it's down, and your stomach's doing flips. Sound familiar? That's anxiety creeping in, and it's a trader's worst enemy. When you're glued to your P&L, it's easy to panic. You might snatch a small profit because you're scared it'll disappear, even though your original plan was to let it run. Or maybe the trade goes against you, and instead of cutting your losses like you know you should, you freeze, hoping it'll turn around. Here's the problem. This inconsistent behavior, jumping in and out of trades based on how you feel, is a fast track to poor performance. And guess what? That habit of constantly monitoring your P&L isn't just a quirk, it's a symptom of anxiety. It's setting you up to act on emotions instead of sticking to your rules. Over time, this emotional roller coaster doesn't just stress you out, it sabotages your results. Let's talk about something critical in trading, your risk-reward ratio. This is the balance between what you're risking and what you could gain. A good strategy aims for a favorable ratio, say risking $1 to make $3. But when emotions take over, that ratio goes out the window. Here's how it happens. Premature profit taking. You see a little green on your screen and think, better lock this in now. You exit early, leaving bigger profits on the table. Your reward shrinks and your ratio suffers. Hesitating on losses. When a trade turns red, you cling to hope instead of cutting it loose. That small loss you could have taken balloons into a big one, blowing up your risk side of the equation. Do this repeatedly, and it's like you're intentionally using a strategy with a terrible risk-reward ratio. You're either capping your wins or amplifying your losses, or both. That's no way to build a profitable trading career. Emotion-driven actions are the culprit, and they've got to go. So how do you stop this cycle? It's all about taking emotions out of the driver's seat and letting your original strategy do its job. The moment you stop obsessing over your P&L, something amazing happens. Your trading improves. Why? Because your strategy, the one you crafted with a clear head, gets to work without interference. Think about it. When you're not anxiously hovering over every tick, you're free to follow your rules. You let your stop loss protect you and your take profit target play out. That's when your risk-reward ratio starts to look a lot healthier. You're no longer cutting winners short or letting losers run wild. Instead, you're trading with discipline. And that's where the magic happens. Ready to make this real? Here are some actionable tips to keep your emotions in check and your strategy on point. Define your rules up front. Before you enter a trade, decide your entry, stop loss, and take profit levels. Stick to them. No winging it mid-trade. Automate your exits. Use stop loss and take profit orders. They're like a safety net that enforces your plan, so you don't have to second guess yourself. Step away from the screen. Once your trade is set, resist the urge to watch your P&L. Go for a walk, grab a coffee, let the market do its thing. Track your progress. Keep a journal of your trades. Note when you followed your rules and when emotions crept in. It's a great way to spot patterns and improve. By doing this, you're not just avoiding anxiety, you're building trust in your system. And trust me, that's a game changer. Here's the takeaway. Trading isn't just about charts and numbers. It's about mastering your mind. When you stop letting emotions cloud your judgment, your original strategy gets the chance to shine. That's why your risk-reward ratio improves, and that's why your performance takes off. It's wonderful to see, and if you're already working on this, keep up the good work. You're on the right path. Thanks for watching, traders. If this video hit home for you, give it a thumbs up, subscribe, and ring that bell for more tips to level up your trading. Drop a comment below. Do you struggle with watching your P&L? Let's talk about it. See you in the next video.